Welcome to Middle Class Matters, Business News in English from Dr. CMA ALAGESAN. Hindenburg Research Report on Adani, Stock Manipulation and Accounting Fraud. Report is read in full, part number 11. Stock Manipulation Case 1 continued. Investigators showed that 14 Adani private companies transferred shares to entities controlled by Ketan Parekh, which then engaged in planted stock manipulation of an Adani listed entity. Adani Group entities initially received bans for their role, but those were later reduced to small fines. Investigators revealed that 14 Adani private companies had organized transfers of shares and funds to 11 entities controlled by or associated with Ketan Parekh. The documented transfers showed movement of more than INR 3.4 billion, US $75 million between February and August 2000 alone. A judge of the Securities Appellate Tribunal upheld earlier rulings that Parekh had carried out synchronized and circular trades and created fake demand and fake volume for a series of stocks, including those of publicly listed Adani Exports, later renamed Adani Enterprises. Entering into such synchronized trades is a misuse of the stock exchange mechanism and tampers with the free, fair and transparent price discovery system of the stock exchange. Such practices distort and interfere in the price discovery mechanism of the stock exchange and leads to the creation of a false market. In its defense, Adani Group told SEBI it had simply been dealing with Ketan Parekh to finance the start of operations at Mundra Port in its home state of Gujarat. SEBI roundly dismissed Adani Group's argument. In the very nature of things, a stock market is not meant for financing transactions. If one needs money, the shares could be sold in the market, which provides liquidity. But you can't raise short-term finances through the circuitous methods as resorted to by Ketan Parekh. After negotiations and an agreed settlement, the bans were later reduced to fines in a SEBI decision in April 2008. One of the Adani Group entities paid a settlement of INR 1.05 million, US $26,000. 6 more settled for INR 7,50,000, US $19,000 each, according to the SEBI document. Stock Manipulation Case 2, December 2003. SEBI alleged that 34 brokers, sub-brokers and clients conspired to carry out synchronized reversal trading, fictitious trading in the shares of Adani Enterprises Limited, causing a 128% spike in shares of Adani Enterprises Limited in less than 1 month. Starting in June 2009, SEBI has began issuing prosecution notices, so-called adjudication orders, after an investigation showed how over a month-long period in late 2003, at least 34 brokerages, brokers and individual traders included in 21 separate investigations had indulged in fictitious synchronized reversal of trades, which in turn had created the artificial volumes and contributed to the price rise in the script of Adani. The alleged practices were in violation of SEBI regulations known as the Prohibition of Fraudulent and Unfair Trade Practices relating to the securities market. A later SEBI order laid out the network of those directly involved. I note that the script of Adani was being traded both at the BSE and NSE during the period of investigation. The table below provides the details of the trading arrangements by the notices in the script of Adani. BSE. ASC Capital Markets Limited, ASC Mangal Ketan Securities, Vijay Bhawan Shah, Sanchay Newman Securities Limited, Rajendra J. Shah Broker, SS Intermediaries Limited, Rajesh N. Javan, E Stocks Incorporation. Client V&S Intermediaries, Samir P. Shah, Flagginki Shah, Dilip C. Jain. Own Director and Accountant Tejas Gelani, SS Intermediaries Limited, NSC Girisha Securities Private Limited, Mangal Kehan Securities, ASC Capital Markets Limited, Sanchasi MG Capital, Investment Growth, E Stocks Incorporation, Rajesh N. Javeri, Dilip C. Jain, Manoj T. Shah, Tejas Gilani, Bella H. Kahashia, Mangaram S. Sharma. According to the allegations, Adani Exports, later renamed Adani Enterprises, stocks suspiciously rose as much as 128% during 19 trading days in late 2003. It took SEBI almost 6 years to prosecute the cases. One of the SEBI orders at the time, the sub-broker, by participating in the trading in this manner, involved in the execution of synchronized or reversal transactions, created artificial liquidity in the script and played a role in the manipulation of the trading. Sanctions ranged from light fines up to 2 years ban from trading or accessing Indian securities market. Note that there was no specific mention in the orders relating to this November-December 2003 time period that Adani promoters or principals have been involved. Stock manipulation case number 3, July 2004, September 2005. SEBI investigated a scheme by 30 entities and individuals to manipulate shares of Adani Exports, renamed Adani Enterprises, resulting in numerous fines and sanctions. Certain entities transacted in the shares of Adani Exports Limited in a fraudulent manner, leading to spurt in the price, SEBI order. Later, SEBI investigated a scheme allegedly perpetuated by 30 brokers and individuals to pump Adani Exports, renamed Adani Enterprises, stock in 2 periods between July 2004 and September 2005. As per SEBI order on the issue, the investigations revealed that certain entities transacted in the shares of Adani Exports Limited in a fraudulent manner that led to creation of artificial volume and a false market. Their trading distorted market equilibrium, leading to spurt in the price, which did not have any correlation with the performance of the company. In the first period of the alleged scheme, July 2004 to January 2005, Adani Enterprises stock spiked 57% from INR 481 to INR 756. During a second period, August 2005 to September 2005, Adani Exports Limited rose over 15%. Some entities and individuals were fined, while others agreed to settle the charges. Note that none of the Adani entities or promoters were implicated by SEBI relating to this July 2004 to September 2005 time period. Ketan Parekh Associates and relatives shifted operations to London. Traders say they may still be rigging stocks. All the previous clients are still loyal to Ketan and are still working with Ketan, rogue Indian trader who knows Ketan Parekh personally. As Indian authorities launched protracted investigations resulting in formal charges, fines and bans, Ketan Parekh and some of his closest associates in the 2001 scam shifted part of their operations to London, according to media reports and our review of UK corporate filings. Multiple sources told us they believe some of India's most notorious market manipulators may still be working with the Adani group. A review of LinkedIn profile for Ketan Parekh's daughter shows she worked at Elara Capital, the London-based brokerage which almost exclusively holds Adani Group stock in its Mauritius-based fund, as detailed earlier. Researchers: Elara Capital, September 2013 to February 2014, 6 months, London, United Kingdom. Online and telephone-based research for an M&A project in the logistics sector, drafted introductory chapters and created graphics for the report. India's Intelligence Bureau alleged that Ketan Parekh defied a 14-year market ban handed down to him in 2003 and remained active in Indian markets until at least 2010, pumping stocks through little-known investment entities, market operators, and a sting of loyal brokers, according to an investigation cited by the Economic Times. Please like the video, subscribe to the channel, give your comments. Thanks for watching.